All right, what's up, y'all? How's it going? Hope you're having a great day. I know I am. Every day that you're alive is an amazing day. All right, so today I wanted to talk about charting. How do you chart? How do you find levels? How do you find supply? How do you find demand, support, resistance? All these kind of things, pullbacks, all that stuff. How do you find that? Where do you even begin at the chart? Like, how do you even start? Where do you look at? So the first thing I'm going to tell you, anybody that's learning how to chart, the first thing you got to understand is that you need to chart with no indicators on. You notice well, if you're new to trading, you don't notice that this is a naked chart. But if you've been trading for a little bit, you notice this is a naked chart. There's nothing on here. There's no indicators, not even volume. Nothing is here. This is going to give us a clear view of just price action. Nothing more, nothing less, just pure price action. That's it. Price action is the ultimate ruler. Always remember that. Indicators are great, patterns work nice, but price action paired with all of that stuff, I look at price action as the main thing, and indicators and stuff like that is like confirmation. That's it. But the level is going to be the actual thing I'm looking at. The ascending triangle or the wedge leading to that level or the head and shoulders neckline that's right there at the level. Whatever. That's just confirmation and confluence for that level that there's action going on right there. Because what you're looking to do is just find areas that there's action, there's movement. So you don't want to find areas that there's not a lot of movement, like a lot of sideways action. Like this right here, for instance. I have a lot of sideways action right here. Right in this, whoop, golly, it's a massive circle. Let's bring that down. There we go. Yeah, so this little area right here. Maybe so I can bring it down some more. Yeah, there it goes. Sorry, y'all, I don't use this circle very often. But yes, now okay, now we're cooking. All right, that took a lot just to get this little area. So areas like this, you want to avoid. These are consolidation areas. So if you see, I also like to call these barcodes. If you see stuff barcoding, stay away. Don't even try. Don't waste your time. If you're gonna take it, you take it at support, which would be right down here at the bottom, or you take it at resistance, which would be right here at the top. That's the only two ways to trade at range. Everything else in here is just noise, and it's in the way chopping around. And if you trade options, you don't want to chop around. You do not want to do that at all. Your contracts will get absolutely demolished. All right, so that's that. Um, gosh, go away. Oh no, there it goes. All right, so that's talking about consolidation. So, like I said, when we first start, we want to use the top-down analysis. Top-down analysis is simply looking at larger time frames. Larger time frames have more days in them. Weekly, monthly, then the daily is a large time frame. 4 hours still kind of large, and then working our way down from hour to 30 minute, 15, 5, 2, and 1. These are all the time frames. So you just follow this order. I don't really look at monthly too much unless I'm looking to swing trade something or like I may mark like a monthly 200 or a monthly 9 or a monthly 21 or um, something like that. Maybe monthly support zones, supply zone, resistance. I mean, geez, maybe like a monthly I can't even talk, demand zone or supply zone, something like that. But I monthly, if I want to be in a play for a lot longer, like swing it or maybe take a leap, then I'll look at the monthly chart. But for me, day trading, I like to start at weekly and work my way down from there. And what I'm looking for is areas of confluence across the time frames. So starting, I can tell you right now, I instantly see an area of interest to me personally. And this is an area that has been touched and tested several times and failed, broke out, failed again. And that's this zone. So I'm going to call this a supply zone. Now, the area I'm looking at particularly starts here and goes to here. However, if I just go back a little more, which is also when you're charting, you make sure you go back as well as forward. But most of the time, go back. See how the price reacted in this area as time went on. So as time went, we can instantly see, one, we rejected, came back up. When it did go, it did a gap fill. So it just jumped straight through the zone, went straight up, had a big, nice candle, Buyers came in with the vengeance, went to the top, got up here, kind of stalled out a bit. But this zone right here, we came down again, broke out, made it up, failed, came back down, retested, got absolutely demolished, came back down, consolidated, made another run for it, touch, 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 came all the way down again, got rejected, came up here one more time, and got rejected again. And now, so anytime we get to this little area, I will look to possibly go short, meaning that I'm going to take a position that it's going to go down. However, if we break out of this area, it's going to be pretty nice because last time we broke out of here, we had a gap fill, and also here we broke out, not as big as we did over here, but we did get a nice breakout and one here as well. So this is a very respected zone on Tesla. Now for these zones, I don't really mark actual price on them because they're just zones, they're areas. So it's just an area of interest for me. And then also another area of interest that I see on the upside for demand is this little area right here, which is where support turned to resistance, resistance support, X1, like that. So we got this area right here. This is another area of interest. I really like this area. So if you notice here, just like up above, we came down to this area, we respected it, came down, bounced off, went back up, came back down, bounced off, failed, and we had to come on down again. Tried it again, failed it again, pulled back, tried it again, failed, pulled back some more, tried it again, broke out, came back, and now we retested and we took off. So these zones right here are very, very respected. Very, very respected area. So we come down to this area, I'm going to take a reversal trade. I'm going to take a position that it's going to go back up. Now, if we go up here, I'm going to take a position that it's going to go back down. Because on the weekly time frame, these levels are extremely, extremely respected. So your chances of getting faked out, some would say they increase because of the level. Some would say they decrease because of the level. But I would say with these levels, you have more confidence entering because they're very, 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 very well respected. So these are areas where you would put size on the trade. For instance, this is a very, very well respected area. And some would say if you're into swing trading, you would definitely. I know lots of swing traders. All they do is trade supply and demand. Like this could be your one strategy, especially like across the forex market. I see people doing this a lot. And this is a great strategy, just simply trading supply and demand. How do you trade supply and demand? Comes to the zone, like up here, if I want to take a position that it's going to go down, I'm going to come up here, take my position. If we break out of this, I know it's time for me to cut my position because we're going to go up. Coming down here, I take my position to go long, which means that it's going to go up. If we drop below, I know I got to get out. My position's over. So your trade is set up for you right here. It's very, very, very simple. Very simple trading. One of my favorite strategies is supply and demand. So now I work my way down. Then I got these little supply and demand levels marked. Now I work my way down to the daily and see what else has been going on. All right, so here's the daily time frame. We already got a resistance area right here. All right, we're having a hard time getting out of this area. This 261, 262 area right here. We're having a very, very difficult time making it up out of here. All right, so when we did get out of here, however, look at that. Big old gap fill all the way up to 275. So that's like about a $13 move just when we broke out of this level. So this level is a very, very high level of interest for me to go long. So remember that supply zone we talked about earlier? Here it is. It's right here. So I know we come anywhere near here, I need to start trimming my position out. Get out of there. Get out, get out, get out. But here, I got a resistance area. Now, another thing I also noticed, I have a support area too. So for me, I like to have 3 touches to confirm my area. So for here, we got 1 touch, 2 touch, 3, 4. Yeah, just going on rejections. We got 5 here, 6, 7, 8. So it's got 8 touches right here. I didn't even count where we're consolidating the area and trying to figure out if we want to keep it or break it or keep it or break it or keep it or break it or keep it or break it. Then we finally broke. So we're not talking about those areas. We're talking about these wicks right here. See this little tail on this candle right here? This right here. This is what we're talking about. These little wicks. That's what I'm looking for. All right. So I mark support. We got 1 touch, 2 touch, 3, 4. But then notice this turned into resistance as well. So then we reclaim. And we kind of got 5 and 6 over here. So this is an area of interest as well. However, if we approach this area with large selling volume, which is very likely just by judging this daily candle, what we're going to want to do is wait on this level to break, take the retest down into the next level, which we'll chart as we work our way down. So these are just the strong levels that are going to help me determine which direction am I going. So here, we get up here, we can go long. All right, here we go down here. So yeah, we get across here, we go long. We get across here, we go short. So that's how I look at that. There's a trade as well. So we got our supply and demand trade. That's one. Then you got another potential trade, which is breaking out of resistance area or support area. Here we got support turn resistance, and it's trying to be support again. And here we had resistance turn into support. So these two areas are very, very high interest for me. All right. Next thing I noticed as I'm taking a look around here is that we got some gap fills that have not been filled yet. The first one actually, and we talked about confirmation. I mean, not confirmation. I can't think of the word now. What is that word? I'm totally blanking out right now. Wow, I can't believe I'm blanking on this word. Confluence, that's it. All right, so yeah, we got confluence here. All right, so this confluence of this gap fill right here lines up with this same resistance level. And if you notice, not only do we have a gap fill on this side, once this gap has been filled, which I like to mark where a gap is filled at, which is right there. Once this gap has been filled, I'm going to make note of that. We go up a little more, you see we got another gap fill. Another gap fill. So Tesla's a crazy stock. We could see 300, this area over here, before the end of the week. Like that's how crazy Tesla can get. So pay attention to where these gap fills are at. So when we get up here, that gap has been filled on this side. But this is so close. Yeah, this is like a $4 area right here that we keep pushing. We have another gap fill starting. So right here, all right, gap fill starts. All right, here we write that the gap has been filled. Gap fill starts right there. All right, so we know we get across here, we got a high probability of moving on out. So this is something maybe I'll leave like one contract to see if we get past that. But my high interest level would be getting over this 261 right here to cash this gap fill up to 275. Now then, that might be a good swing trade. So a swing trade, you have to have further out expiration if you're trading options. So instead of expiring on the week, you might want something that expires maybe at the end of the month or maybe at the end of the quarter or something like that. So now let's work around our way down and find some levels within these areas. Yeah, so just right here on the 4 hour, once again, a lot of strong resistance, turning the support, come on with it. Now, some of these you will make small adjustments, but Tesla actually looks pretty nice. There's not too much differentiation on the areas. Tesla looks pretty nice. So like, see how this says 240.60, $240.60. So I would treat this as like maybe instead of $240.60, maybe I'll just change it to a solid whole number of just 240. I did this earlier today too. I'm so used to doing this. Yeah, 240. There we go. Just a solid whole number, 240. So you want to do whole numbers or half cent marks on stuff that you're trading usually. Sometimes it is like an 80 cent mark if you're trading SPY. So you just got to know how whatever you're trading, how that moves. All right. So somebody would argue and say like the 240 level is good, but the 238 level is where it's at. Which for me personally, well, 237, that's where it's at. So this is a potential trade. It's well right here, this little area. So I'm not counting this as a zone exactly. I'm just waiting to see because if we drop through this right here, if this level approaches with lots of aggression, then the next area I'm going to be looking at to take to the upside is right here. And so what I'll be doing is looking for a bounce near that area. So I can draw a little box so I know I'm looking for a bounce. Notice my bounce and reject boxes are a lot smaller than the supply and demand boxes. Alright, so boop, come right across there. So this will be an area I look to take a bounce in. Like I say, this 240 area, yeah, it could do something, but the area that I'm really gonna be looking at is 237. So this 240 area, that's like an area I'll just kind of watch. So as we get down to these smaller time frames, you'll see that some of these are just areas that we might need to just watch. So in this case, this is an area that I'm gonna watch because I know if we drop this 240, then I'm more than likely gonna see this 237. And with this candle being so massive, I mean, it engulfed like all of these candles right here. It just destroyed them. I'd be possibly looking to see that if we're gonna actually hold this 240. Um, I don't know. I don't know. I don't know. I don't know. But it's looking possibly dumpy. This all depends on what the market does. As we know, okay, September is historically not a good month for stocks. So we'll see how this is gonna play out. So we may be looking at a lot of downside stuff this week. I don't know. But like I said, this is not necessarily a watch list. This is just a charting video. So this is another area we could potentially take a look at. Now, the hourly chart is where I like to set my entries and exits from. So we look on the hourly. Look at that. How that's beautiful right there. Absolutely beautiful. So this is why I say like these higher time frame levels are great. You notice this lines up very clean. So this could go right here. I don't know. I could be totally wrong. Who knows? But this area right here, definitely a big area of interest for sure. For sure. We drop this 240, you better believe I will take the 237 without a doubt. Now, here we're on the hour time frame. And let's talk about how do we find our levels within the hourly time frame. Alright, so we got this 240 level marked. Now, let's work our way and find some other stuff. Well, the first thing first, just looking right here, I look for big wicks. So this big wick right here tells me that, oh, there's some buyers really stepped in right there. So this is an area of interest. We dropped this area, and when we did drop it, it was vicious. That's where we got a nice big old candle from. Lots of volume, lots of heavy selling volume came in right there. So for me to go long, which meaning make our way back up, I want to see a break over this area, this line right here, this area. And really, like this will kind of give me an idea that we're moving, but really some could even argue and say this one here. But for me, I'm looking where the massive wicks are at. And the massive wick is right here. So that's the area that I'm going to focus on. If you notice, this massive wick also lines up with this massive wick as well. So this is a resistance turn support. So I'm going to be looking to see if we can take a reclaim of this level. If we take that reclaim, I'd definitely be interested to take this all the way up to the first area that we definitely want to look to take profit would be like 254. All right, so I'd mark that as a take profit 1. All right, then the next area will be kind of in this area, this 261 area. So the next area interest I'll take is 260. That'll be the next profit target. Yeah, well, 259. So we get past this level, big trim, and then you leave a couple runners. But when we get up here, yeah, I definitely will probably be out the position for sure, for sure. However, we got up here. I might have to leave one contract in to see if we're gonna how we approach this. As we approach these levels with strength, I mean, it's gonna do something. It's gonna do something for sure. We definitely can see a pop, and may get our gap fill all the way up there. So now that's just to the upside. Now, to the downside, the area that I need us to break for me to believe that we're headed down is just this wick. So you want to look for these tails or these wicks. So there's a lot of buyers right here. So if the sellers come in and defeat the buyers, now this level is broken and it's going to become resistance. So here we'll look to go short. Alright, so this area will have us go short. Now as I'm looking across here, when I look at a position, I want to see what's the biggest distance on the candle. And so this one candle goes all the way down to 237. That's a great risk reward. Great risk reward. Great risk reward. So to enter this trade, what we want to do is wait to see this level clear. So you might want to see it go down to like 240-ish. Remember we talked about that bounce area? That could be a relief bounce. Sometimes there's a relief bounce when you have a lot of downward pressure and selling pressure. Need to do a little bit of recovery, a little bit of relief right there, so you get your relief bounce. So we drop this 242 level. I will be looking for a relief bounce near 240, and then take the retest at 242 to take it on down past 240, and then down to 237. So that's how that trade would set up to the downside. And at the downside, I know that this is a big demand zone, so I'd be out. I'll be out of this trade for sure. All right, so that's how I find levels and get an idea of where I want to set a trade up. All right, now I did that, like I said, with no indicators whatsoever. Now then, I need some confluence, right? So let me do some more confluence. Let me turn on an indicator. So let's turn on the volume. That's the first indicator I like. So I'm looking at how are we approaching stuff from a volume standpoint. You know, do we have big green candles? Do we have small ones? You know, well, what's going on right here in these time frames? Yeah, that's beautiful right there. That's beautiful. That 242 level. That's a level. That's definitely a level of interest. Definitely a level of interest. So depending on how we approach that, I might even take a bounce there. I don't know. We shall see. But we start off the market open though. We could get a nice push up to this 250, 251 area, and then probably maybe hit a reject right there. I don't know. But we got it. All I can do is just be prepared, read the chart, just wait and see. That's all I can do. All right, so now let's turn on more indicators. One of my favorite indicators to use is just VWAP. Oh, that's right. I changed. Oh, let's change layouts. Just a second. I gotta change the color on that. So we'll make it this. All right, there we go. Okay, now I can see it. So on the VWAP, it's kind of spread out on these bigger time frames. So you move down to like the hourly. You see a little bit better. So these little plus signs, that's my VWAP. Now what that lets me know is if we're below VWAP, then we're on a downward. You know, we're on a downward trend. But if we're above VWAP, then we're trending back up. So that's an easy way to let you know if you're on the downside or the upside to help you figure out your trade. So in this case, the VWAP also lines up with some wicks, right? It lines up at that 248. That's why I said this 248, 250 area. No, what did I say? 248, 250 or 249, 250, whatever. This VWAP area right here could easily reject. Easily reject right there. Easily reject. So for me to buy the upside, we need to clear this area, clear the VWAP, plus also clear this 250, 251 level, and go. That'll be a sign for the upside. All right. So remember that all that lines up with this area that we plotted, high confluence area. So we come up to there with nice volume onto the upside. I'm taking it. taking it. Taking it. And remember, before you enter the play, the safest route is to do a break and retest. So that means I need to see this break out this level, break out this 250, 251 level, maybe go up to 252, 253, come back down, test this level, then I'll take it to ride it back up. Or you can do a little bit more riskier entry, which is the break and hold. And the break and hold is simply, you see it going past this level, you see the buyers coming in, your level 2's cranking up, buy your position and just take the break. Now, if it doesn't hold, if it doesn't close there, get out. Get out, get out, get out, get out, get out. I always wait for a candle closure before I enter a hold, personally. That's just what I do. I like to wait on candle closures because I cannot tell you how many times I've been faked out. Alright, so now I want to turn on the 8 EMA. And then the 21. And then the 200. So, this 21 EMA, let me change the color of that. We're going to change this to green. Oh, wait, I already got something green. Let's change it to red. So this 21 EMA lines up with this level. So this whole area right here that we talked about earlier, we could see a rejection or we could see you go long. Just by the looks of it, I probably look at this area more as a rejection area. Just what I would do personally. So how do I mark that? I'm going to look at a rejection. I draw a box. That's it. So I know that, oh, I'll come up here. This is the hourly 21. So I'll write that down right there too. Hourly 21. Which also could be the 4-hour 8 or 9. So I'm just going to write hourly 21. So I'm still going to the 4-hour. What is that? Yeah, that's the 8 on the 4-hour. So that area right there is a high confluence area for a reject. So I'm just going to put 4-hour 8. Yeah, so this is nice prime for a reject area right here. Alright, it was once support, it was once resistance, reclaim, came back, acted as support, went up, consolidated for a bit, dropped the level, and we haven't come up to retest it yet. So this rejection would technically be the hourly retest, is what we have right there. So that's how that trade could go. So I've given you several trades just off of price action that we could do. And so these are the indicators. Now then another area, let's see. Oh geez. Oh, come on now. Come on. What Boosie say? Come on, man. Come on, man. So look, y'all, right here. This is why I wait to turn the indicators on at the end. This is one of my favorite clouds to use, which is the 3450 cloud. Alright, look, we got the 21/4-hour 8. We got the 3450 on the hourly. You bet I'm going to take a reject right there. That would be a great spot for a reject. Now, if this occurs Tuesday, I will not be able to take it because I will be working. Unfortunately, my job requires me to be in front of people and talk to people the whole time I'm in front of them. So I can't, I'm not like at a desk or something where I could just look at my phone real quick and do stuff. I don't work in an office environment or anything like that. So what I do requires me to talk to people all the time, like the whole time, nonstop. So therefore, if I can't trade, if I'm working, I cannot take that trade. I simply can't. But this is a great trade. This is a really, 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 really solid trade. I think you know what? I'm gonna set an alert for it because this is just too good. Oh wait, no. Yeah. I'm gonna set an alert at we're gonna set an alert at 249.60. We're gonna alert Tesla at 249.60. In that alert, we want to make sure the alert is edit. We're gonna make sure we are crossing up. So we crossed that area. I know. So what'll happen is I'll get a notification sent to my phone. If I have a second to take it, I will set the trade up and put it on autopilot and let it do its thing. What I like about Webull is that I can set my trade up. I can set in my buy price, my stop loss, and my sell all in one trade, like one order. So that's what I might do right there. We'll see how that goes. But the R&R on this is great. It's great. Um, like I say, I will highly definitely be looking at this area for sure. It's a great area for a reject for those reasons that I listed. All right, so that's that. And another thing I like to use is occasionally is the fibs. So fibs are great. Fibs are your friend. I love the fib. That's what we got here. To line up with anything, let's set the 0.5, 0.32. Yeah. Let's see. Hmm. Yeah. Excuse me, y'all. I just like to do this. This is fun. You find all kinds of random fun stuff to do when you're waiting on price action, but that's something I like to do with the fibs. But yeah, the fibs are your friend as well. I like the fibs. Don't you? I mean, I use them sometimes, but I'm mostly about price action. That's what I'm all about. And so now, as you can tell, my chart looks a lot different than when I first started the video. So that's what happens when you turn indicators on versus turning them off. As you can tell, it makes the chart a little bit messier. So if you're like when the market is actually going, the what I'm using to trade is just 8, the 200, VWAP, and 50. That's pretty much it. So I have this off, and this off, and this. So these are all off. So I'm going to turn the rest of the indicators off, and you'll see what the chart looks like again, with no indicators at all. Yes, the volume indicator. So that's no indicators, and then me adding indicators back. My charts look like that. So that is my charting video. Feel free to comment. If you have any questions or anything like that, don't forget to hit that subscribe button for your boy, and I'll see y'all in the next one.